You gotta be flipping my flapjacks. Have a look at that, folks. Nvidia stock price down 17% in one trading day. And the company didn't even come out with earnings. The damage was extensive here today. Oracle stock down 14 percentage points here today. Broadcom, which doesn't get talked about as much, but nearly $1 trillion market cap on Broadcom. Broadcom stock down over 17 percentage points here today. Micron stock, which is the biggest memory chip company out there, at least as far as US-based companies, down nearly 12% here today. It was a complete free fall for so many stocks out there. I looked at the public count. I was expecting extensive damage. It's down like 0.6% here today, which I will gladly take. I kind of feel like we just stormed the beaches of Normandy and somehow I made it through, and I'm like, oh my gosh, like how did I make it through there? I was not expecting that. So Nvidia just lost $600 billion in market capitalization today. It's the biggest one-day loss in US history. Yes, folks, you just experienced a historic day here today, folks, okay? Now, this is crazy because when I got started in the market, end of 08, going into 2009, there was not even a company out there that had a $600 billion market cap as far as the whole market cap. And I think one company just lost that in one day is unbelievable. We've got some subjects to speak about here today. First off, I'm going to share my thoughts on NVIDIA. Is this a buy the dip opportunity on this stock? What's going on here? I'll share all my in-depth thoughts on this one as somebody that's been a shareholder over time of that company, right? SoFi Technology stock was down pretty big here today, down about 10%. I want to share my thoughts and opinions on those SoFi numbers and kind of show you some important things in regards to those SoFi numbers here today. Additionally, I spent $20,000 on 4 stocks here today. We'll talk about why I bought today. We'll talk about what stocks I bought here today and which stock of these is ready to absolutely go on a tear and absolutely have an incredible run. So we'll speak about that in this video here today. One thing only I need from you guys. It's an action-packed video. It's an action-packed day. All I need from you is to take 1 second out of your time right now and hit that thumbs up button for me. That's all I ask from you guys. I appreciate every single person that does it. It helps the channel out so much. And also, thank you everybody subscribed here to the channel. We just hit a new all-time high subscribers in the history of this channel. If you want access to all my premium courses, access to my private Discord chat, my private stock group, as well as 1000xstocks.com, pin comment down there, click on that, fill out a form. We'll see if we can get you access to that later on this week. If you're seeing opportunities out there in the market like what you're seeing today and you want to learn how to take advantage of those, my private group can definitely help get you up to a much higher level. Or you can just let these opportunities pass by year after year after year, right? Alrighty, so here's the deal, folks. NVIDIA. Now, if you don't know my history around NVIDIA, I owned the stock many years ago. I bought it kind of like the end of 2018, going into 2019. It was just an incredible opportunity at that time. A lot of tech stocks were getting hammered, right? I made some short-term money on NVIDIA and sold out. Then I owned the stock in 2024, made a bunch more short-term money. I think I made like 50% or something crazy on NVIDIA in a very short amount of time and sold out. And so NVIDIA has always been a hard stock for me to own. I don't have any shares of NVIDIA right now. And so it's always been a hard stock for me to hold on to over time. I've owned it on and off, and I've made money on the stock. It's been a good money maker for me, but not as much as if I had just held. It's very different than like a Meta stock, right? Meta is kind of opposite of that. Like Meta, it's just very easy for me to hold that even as that stock goes up and make incredible amounts of money. And I think the reason is, at the end of the day, Meta is just a much more stable business model. NVIDIA goes through these massive cycles of just like insane chip demand and then kind of a flatlining and then a crash. And so NVIDIA is just, because it's a little bit more of a cyclical company, it's just a lot harder for me to own it for the long term than it is something like a Meta, right? Now, what happened here today? The sell-off was sparked by concerns that Chinese artificial intelligence lab, DeepSeek, is presenting increased competition in the global AI battle. Last month, DeepSeek unveiled a free open-source LLM, large language model, that it says took only 2 months and less than $6 million to build using reduced capability chips from NVIDIA called H800s. Okay. NVIDIA's graphics processing unit, GPUs, dominate the market for AI data center chips in the US, with tech giants like Google McDougal, Meta, Amazon spending billions of dollars on the processors to train and run their AI models. Analysts at Cantor wrote in a note to investors that the release of DeepSeek's latest technology has caused, quote, great angst as to the impact for compute demand and therefore fears of peak spending in GPUs in 2025, right? Okay, no bueno. The analysts who recommend buying NVIDIA shares said they think this view is the furthest from the truth and that advancements in AI will most likely lead to an AI industry wanting more compute, not less. Now, this reminds me of a situation. You guys ever, known two people that broke up before and you knew both parties and you heard why it happened, right? They went through a breakup, a divorce, whatever. A lot of times what happens is, the female blames on the male blames on the female, they just blame it on each other, right? And it's all the other person's fault. And what you find in those situations is there's some truth, right? There's some truth on both sides of it. But it's not 100% truth. That's how I feel in regards to this situation. I think there's some truth about this DeepSeek likely was able to build this model that's very impressive from what I hear. Yeah, it's as impressive as what OpenAI has, if not more impressive. I believe they were able to build this in a pretty short amount of time. And additionally, I believe they were likely able to build this for less money, maybe even far less money than, let's say, the big tech giants that are spending all this money on all these NVIDIA chips right now. With that being said, I have a lot of doubts that they pulled this off for $6 million in 2 months. I have a lot of doubts about that. My guess is, this is a complete guess of just kind of putting all the pieces together. I believe in China, there's several companies that have the H100s. Several companies. You can get them through various means. As everything in this world, if something's illegal, does that prevent it from coming into a country? I don't think so. So if these H100s are illegal in China, they're not supposed to be over there. You don't think they could end up there? Of course they could, right? So my guess is this DeepSeek is probably illegally using some of NVIDIA's highest end chips, but they can't admit it. Why can't they admit it? Well, because they're not supposed to have it. And last thing you want to do is tell the world, oh yeah, we got all the NVIDIA highest end chips and we're using all these. No, okay? So that's my guess. There's some truth in the fact that they built this model in a pretty quick amount of time and they did it for cheaper than what a lot of these big tech companies are doing. But I also call BS on them building it for $6 million. I call complete BS on that. Okay. So, little truth, little lies, in my opinion, in regards to that. NVIDIA calls China's DeepSeek R1 model an excellent AI advancement, right? Now, there's a few ways you could look at this, right? This is like, first off, you could look at this and you'd be like, oh my gosh, like if you are of the belief that they built this for only $6 million, right? Which once again, like, okay. If you're of that belief, then you look at something like this, and this is going to scare the crap out of you in regards to NVIDIA, because you're like, oh my gosh, they're giving them even more credibility. NVIDIA and Jensen's coming out and saying this is incredible AI advancement and an achievement this company pulled off. If you think they only built that in $6 million, that's not a good feeling, right? You'd almost rather have NVIDIA not say anything in regards to it. My guess is NVIDIA probably knows that this company is using some of their highest end chips behind closed doors. They just can't admit it. That's my guess in regards to that, right? So, what problem did I tell you guys NVIDIA would run into in 2025? The problem I told you NVIDIA was going to run into is they're going to run into the situation where essentially is exactly what they're running into. People worrying about peak spend in AI chips, people worrying about 2025 being the last year of really strong growth for NVIDIA. And then 2026 and 2027 kind of like, we can call it very slight growth or maybe even flat lines. Or you have some people running these conclusions about maybe even a decline in spending, which is a whole situation. So, it remains to be seen. Now, let me show you guys another issue with NVIDIA, okay? So, the issue with NVIDIA when it comes to valuation actually has nothing to do with the forward P. The forward P actually looks very fair for NVIDIA, right? A 29 forward P for a stock that's been growing the way NVIDIA is growing, like that's not bad at all. Even if NVIDIA went down to slight growth, when I say slight growth, I'm talking the 5 to 10% range. I mean, still 29 is not bad, even if the company had 5 or 10% revenue growth per year. So that's not the issue. The issue's down here. NVIDIA's price to sales ratio has gotten so insanely rich on this stock that's where the valuation concern comes in for NVIDIA. We're talking about a price to sales ratio on NVIDIA of 30 plus, right? Now, if you look at somebody like an AMD, 7.5. So we're talking about NVIDIA has about a 4x price to sales ratio over AMD. And so that causes quite a concern if revenues were to essentially flatline, or especially if they're going to decline. Because if revenues were to start to decline, that price to sales ratio would probably have to get cut in half or more, which means there could be 50% plus downside in NVIDIA stock. But before you run to that conclusion, be careful running to that conclusion, right? Because if NVIDIA keeps growing and growing, like that's not going to happen, right? It's just this concern about like you don't need as many chips and companies bring down their AI budgets, something like that. That's where the issue comes in. It's not around PE, it's around price to sales ratio of NVIDIA. So that's the important thing to understand here, right? So for me personally, NVIDIA is a no touch. When I say no touch, I don't want to buy the stock right now. I also am confused about, what is what are NVIDIA's revenues going to be in 2026, 2027, 2028? That I can't tell you right now. I cannot confidently say anything. I could confidently tell you roughly where Meta's revenues are going to be in 2026, 2027. I can pretty confidently tell you where Amazon's revenues are going to be in 2026, 2027. I can't do it with NVIDIA right now. It's a really difficult time because they just went through such a hyper cycle of AI chip demand, which is still funneling through in 2025. But then 2026, it's a real question of like, could CapEx budgets fall? And I think that's a real debate. Could CapEx budgets fall in 2026, right? And what does that mean for NVIDIA? So that's why I'm just looking at it, I'm like, I don't want to touch this with anything right now. I don't want to touch it. I don't know what that is about. I don't want to touch it with calls. I wouldn't want to buy call options with that. I know some people are buying call options on it today. Cool, but it's just not my cup of tea. I don't want to buy put options on it either. Because if NVIDIA comes out when their next quarter does come out and reports great numbers and everything, I mean, it's just, and also if you're buying calls and puts, you're going to have to pay such a crazy premium because also everybody's confused on what's going to happen here with NVIDIA stock over the next few weeks or the next couple months. And so therefore, if you buy call options or put options, you're probably going to have to pay crazy premiums on that, which is going to kill a lot of your profitability. So the moral of the story is, I don't want to do anything with NVIDIA. Nothing is interesting to me in regards to NVIDIA at the moment. If maybe the stock falls a ton more, then maybe it's interesting as a buy for me, right? If the stock skyrockets back higher, but then maybe it looks like some validity and maybe CapEx budgets maybe going down in 2026, because then maybe we could talk about it on the put side or something like that. But for right now, I don't want to do anything in regards to NVIDIA, right? Now, you might see stocks like Meta having a good day today. Like you look at the NASDAQ's a disaster today. You're looking at NVIDIA, the most important stock in the stock market for the past 2.5 years. The stock down 17% in a day, and yet Meta is like, oh, what happened? Oh, sorry, I went up 2% today. Oh, I was supposed to go down? I'm sorry, I didn't realize that, right? Amazon was also green today. And this is on a disastrous day for the NASDAQ. And so you got to look at it and you got to say, why is Meta stock, why is Amazon stock up today? Why are these stocks up today? Like some people would be like, this doesn't make sense. Let me tell you exactly why those stocks are up today. The reason those stocks are up today is because if there's some truth to the fact that you can build these models and you can make some of these AI achievements with lower end NVIDIA chips or not as many of NVIDIA chips as you thought, then that could put Meta, that could put Amazon and many of these other companies in a situation where they might not need to spend as much in 2025 as their budgets say. Or they might need to flatline their CapEx budgets in 2026 or maybe even bring them down. And if that's a situation, then we could be talking about those companies will have way more money to then do share buybacks, to buy out other companies, to pay dividends, and those sorts of things, rather than saying, we need to get all our free cash flow together and put it toward NVIDIA chips. So that's why those stocks, even on a disastrous day like today, actually were green. People are like, huh? Because, I'll be honest, if there's any truth in what's going on here with this DeepSeek situation, then I can tell you, companies like Meta and Amazon will not need to spend as aggressively as people think they will over this next few years, which is a tailwind behind those companies, right? So that's the whole NVIDIA situation there. SoFi Technologies reported earnings here today. Stock went down 10%. Now, keep in mind, SoFi stock probably would have been down no matter what today, given the way the NASDAQ was. So I wouldn't have been surprised if the SoFi was down 3 or 4 or 5% if there was no news on SoFi. So the fact that it fell 10% was not too crazy given the day we had today. Now, let me be very crystal clear about why SoFi stock fell, and then we'll get into the nitty-gritty numbers here. So SoFi stock had sank 15% on Monday after the lender issued Q1 and 2025 earnings guidance that fell short of Wall Street estimates, while Q4 EPS beat slightly when adjusting for non-recurring items. The lender and banking app company introduced 2025 guidance for GAAP, generally accepted accounting principles, earnings per share of 25 cents to 27 cents, midpoint of 26 cents, obviously, which compares to 29-cent consensus. So they missed there, right? No, there's no debate. Like that's lower than what analysts were thinking. An adjusted net revenue of $3.2 billion to $3.27 billion compared to $3.05 billion was consensus. Adjusted EBITDA is expected to rise to $845 million to $865 million from $666 million in 2024, but that's lagging what a lot of analysts are at, which is around $913, right? So the moral of the story is here, tangible book value growth is expected to be $550 million to $575 million. So the moral of the story is here in regards to this whole analyst game for SoFi, they missed a few numbers, but the numbers still look really dang good, okay? Now check this out. Let's go a little nitty gritty here on SoFi. Check this out. 10 million plus members they have now for SoFi. That's incredible. They're becoming a big dog, man. Like they're, we're watching them grow up right in front of our eyes. We're watching these guys grow up. Look at where they were at this time last year, 7.5 million members. And now to be over 10 million members, this is an incredible accomplishment. And it looks like SoFi is on the path to, eventually being a company that has 20 million, 30 million, 50 million members of this company. You could also call them customers, right? They call them members, you could call them customers. And that's incredible. So I'm 100% convinced that SoFi is on their path to become a banking giant. A banking giant, right? And obviously a fintech giant as well. But really, I look at SoFi and I see a company that is set up to be a banking giant, just in the digital space, right? And it's just so obvious to me when you see the growth in the amount of members this company has, right? All they got to do is just make sure they make it through future recessions, get out to the other side, and then when the economy is really good, just prosper, right? Now, looking at their income statement here, I gave them a B- grade. So loans and securitizations came in at $688 million from $598 million. That's good. Other category came in at $55 million versus $46 million. That's good. Total interest income, TII, $743 million versus $645 million. That's good. Now, interest expense, securitization and warehouses, they brought down massively to $23 million from $62 million. Deposits was up as far as an interest expense there, $238 million from $182 million. Corporate borrowings was up to $12 million from $9.8 million. So total interest expense was $273 million versus $255. Now that's not bad because look at how much interest income was up. Interest income was up nearly $100 million. So to have total interest expense up less than $20 million is a huge win for SoFi. So we're looking at net interest income, which is arguably the most important line to look at when it comes to banking related companies, right? Net interest income is $470 million versus $389 million. Non-interest income, loans, origination, sales, and securitization was down for the company, a little under $10 million year over year. Servicing also was actually a negative number, $1.3 million versus $7.5 million positive. Now, as far as technology products and solutions, that was up, but not that crazy. It was only up a little over $1 million. Loan platform fees, $63 million versus only $9.3 million. So that's a night and day difference for the company, for the better. Total non-interest income, $263 million versus $225 million the same quarter last year. Total net revenue, $734 million versus $615 million. Now, their expense profile is, in some categories, a little out of control, in my opinion. Technology product development, that's not bad. $148 million versus $141 million, not bad. Sales and marketing is definitely very aggressive for the company right now. $229 million versus $174 million, but you could also say they're attracting so many members for the long term here that it's an investment that's worthwhile for the long term. Yeah, that's very aggressive spend. We're talking about that $54 million increase year over year in sales and marketing. That's significant, but the long-term payoff should be there. Cost of operations went to $128 million versus $103 million. General administrative went to $160 million versus $131 million. Total non-interest expense went to $667 million from $552 million. So, definitely a major increase year over year. Now, income before income taxes went to $59 million from $51 million. The thing is, the numbers are just not nearly as impressive as it should be, but Anthony Noto and SoFi, they are trying to build out a company that is massive, giant for the long term, right? So I feel like sales and marketing, general administrative, cost of operation, I feel like they could have those numbers be significantly lower than where they are right now. But my belief is Anthony Noto and the team is spending so aggressively for the long-term opportunity that is here, right? Now, they had a one-off kind of income tax benefit of $272 million, so that made their net income look like it went to the moon, right? $332 million in net income versus $47 million, so it's not as good as it looks, right? If you take out that one-off. And then EPS on a diluted basis, 29 cents versus 2 cents. Also, once again, if it wasn't for that kind of one-off income tax benefit, I can tell you that EPS wouldn't even been close to that. Now, in regards to SoFi, here's the deal, okay? You can go one of two paths in regards to SoFi. You can look at this short term and be like, this number is not as strong as it should have been, and man, they're spending so aggressively on the company, so not nearly as much of that interest income is hitting that bottom line like I want to hit. But you could also take a view, glass half full here, and look at this one long term. The moral of the story is the company's fintech side of the business is growing immensely. The banking side of the business is growing incredibly strong. They're setting themselves up to be a digital banking giant, right? And so when I look at all those things and I look at Anthony Noto seems to be really building a company that is going to capitalize on this massive opportunity over its next 10, 20 years, I like what I see here. And so I'm much more glass half full here, looking at it from the long-term perspective. There will be a day when SoFi is really focused on the expense profile a lot more and not as focused on market share and stealing members. But that's not in this decade. That's not in the 2020s. The 2020s for SoFi is all about revenue growth, interest income growth, member growth, right? I feel like, 2030 beyond, 2035, 2040, that's probably going to be the days when SoFi is much more focused on the bottom line, when they're much more focused on just trying to be like a traditional bank and just making the money because they already have such huge market share there. So you really got to focus long term. I would put it like this. SoFi reminds me a lot of stocks like Palantir or even stocks like Tesla, where if Tesla comes out and reports, quarterly deliveries missed a little bit, sure, you could get all worked up over that, but at the end of the day, if you believe they're in front of several technology innovations that are massive over the next 10, 20 years, then you shouldn't be getting caught up into those short-term numbers, right? Same thing with a Palantir. SoFi reminds me a lot of Palantir. Palantir is, very volatile stock, obviously, right? Numbers move all around, but at the end of the day, when it comes to Palantir, you got to let the company does what the company does, right? And so you just got to really take a long-term approach with a stock like that, and you got to do that with a stock like SoFi. So my opinion is I would have loved for them to come out and crush all the analyst expectations. And let me be very clear. If they had come out and crushed all the analyst expectations today, the stock price would be today $20 plus. But they didn't. I think this was a quarter you walked away from feeling good about SoFi, but not feeling great about SoFi. But for a long-term opportunity like we have here with SoFi, like I'm fine with feeling good. I don't need to feel like great all the time, right? Alrighty, next one up here. I spent $20,000 on some stocks. Why did I do it? What stocks are they? Which stocks are ready to fly here, right? Which there is one that's setting up for a pretty incredible move to the upside. So NASDAQ was down 3+% here today. It's very simple with me. There's always stocks in the market I think are a buy, right? Incredible opportunities. If I see one of the stock market indexes down 3+%, I am just programmed, trained to say, let's go buy. That's exactly what I did. So I moved $20,000 over today in my Ally account, and I said, let's go make some buys. That's exactly what I did here today. So what stocks did I buy? One is, probably comes as no surprise, AMD, Advanced Micro Devices. I bought over $10,000 of this stock here today. $114.72 I paid for them. This is like the perfect situation. All those worries about NVIDIA, DeepSeek, all this stuff, all the weakness in the semiconductor space. As somebody that's an active buyer of AMD right now and wants to get my hands on as many shares as I can before AMD earnings come out, I'm just sitting back right now like, you freaking go, baby. Thank you, DeepSeek. Thank you, whatever, blah, blah, blah. Let's freaking go. This is like the most perfect situation. I'm trying to get my hands on as many shares as possible before earnings. Then we're going to see your earnings. I'm going to look at the numbers. I'm going to look at the guidance. I'm going to listen to a conference call. If everything looks great there, I'm going to keep buying after earnings as well, right? And so this is incredible. Like, thank you. Like, give me the gift. $114 for AMD, thank you. I'll take AMD as low as I will go. Like, as low as investors want to sell AMD right now, I will gladly take the shares off their hands. Sell them to me for $94. Sell them to me for $74. Sell them to me for $54. Please, give me every share you can. I'll gladly take them off everybody's hands, right? Now, the reason I believe there's very limited downside risk in AMD. So obviously we spoke about NVIDIA. It's like, yeah, if NVIDIA blah, blah, blah happens, could the stock fall 50+%? There's definitely a potential. I think there's very limited downside potential in AMD. And the reason being is, one, the forward P is not a problem. So you don't have a valuation concern as far as PE goes. But you also don't have an issue with price to sales ratio. Price to sales ratio on AMD is in the 7 range right now, compared to 30 plus for NVIDIA. So therefore, I don't have concerns on either side when it comes to AMD. And that's what makes it hard to get AMD, if you're expecting a 50% fall, which I would love in AMD, send it to $50, right? Or send it to $60. Extremely low probability. I would say less than a 2% probability that would happen because of where the company's trading at right now, right? Now, additionally, I don't know if you guys saw this video here that I did very recently. Now, I don't know if you guys follow my channel, the reaction channel, Jeremy Lefebvre Makes Money, right? But I've been speaking about AMD quite a bit on that channel, and I also speak about, obviously, quite a bit here in the last few weeks or last month on the main channel as well. But one of the things I've been talking about is inference versus training in regards to these GPUs, right? And Lisa Su believes that the long-term opportunity is much bigger for inference, which is essentially these LLMs and other products running over time versus these models being trained, right? And so NVIDIA has been killing it because their chips are considered the best for training, right? Lisa Su believes that AMD chips are the most well-positioned for inference. If she's correct on that, right? And it honestly, the story does kind of add up. Like you do some research on this, you're like, dang, yeah, I can see actually her being correct on this. The long-term opportunity for AMD 2026 and beyond is massive. Like, we haven't even begun the fun stage on AMD yet. If she's right on that, which, to be honest, Lisa Su I trust. I remember shortly after she came over to AMD, it was a $2 stock. It was a $2 chuck. It was a joke, right? And a lot of people thought the company was going bankrupt, and that certainly didn't happen, right? And they became a giant, and now people are worried about Intel going bankrupt. Like, it's incredible, right? Next stock I bought here today is Elf Beauty. 43 shares, $104 I paid for these babies. Oh man, yeah, is Elf going to go under 100? It's flirting with it, right? It was about a $4,400 move here today. Now, if you know me, I have a long history with Elf. I know this company inside now. They got 2 problems right now. Now, we don't even know what's going to happen with these 2 problems, but there are 2 problems nonetheless. They're the 2 T's, tariffs and TikTok. So, what's Trump going to do? Is he going to put massive tariffs on China? We don't know. We're going to see. Like, maybe a 25% tariff, 50%, 60% is coming. And obviously if they do that, since so much of Elf product is made in China and then transported into the United States, There's no doubt, like Elf would either have to take short-term hits on that or pass the price on to consumers really quickly. There's no doubt that could be disruptive. No doubt. There's no debating that, right? But it's just completely up in the air right now. We don't know what's going to happen. So it basically puts Elf in this weird situation of like, let's see. And it kind of, unfortunately, the company can't control that for the most part right now. They obviously can get some production outside of China, but for a lot of it, they just can't control. And there's TikTok. The whole TikTok ban, or people can't download it, or what's going to happen with that long term, right? And a lot of Elf products go viral on TikTok. That's a worry as well. So Elf just has these two massive worries, and they're not small worries, they're massive worries around it that are just clouding the stock right now. Now, the good news for Elf is a lot of this can be cleared up on February 6th. February 6th, the company's coming out with earnings, and we're going to hear what happens with the numbers. And here's the deal. If the numbers are great, the guidance is great. Here's the deal. The stock's going to blast higher. I'm talking like, 20% plus move quick. Like, boom. They got to come out. They got to nail their numbers, and they got to beat their guidance and be ahead of where analysts are at. And then all of a sudden, everybody will say, here we are again, freaking out over Elf, thinking this is bad, that bad, this is bad, everything's bad, blah, blah, blah. And we made a big mistake here, right? And that happens almost every year, it seems like, in regards to Elf. So we'll see. But yeah, that's what's going on there. And I'm like, let me get some shares here today. Like Tarang, he's done such a great job running this company. And the brand is such a great brand for the long term here in the space they're in. It's almost like a SaaS play in terms of just like people run out of the product, they go buy more product. Like they're so well positioned on all the social media. It's not like they're just relying on TikTok. I understand it's a big concern, but they're huge on Instagram and YouTube and everywhere. Like they're just a beast. Next stock I bought here is Nike. $3,700 buy here. Nike, $75.63. I bought 50 shares here today. Great interview Nike CEO did with Fortune magazine, 14-minute interview. He did this, obviously probably in the last few weeks or whatever, but they released it on their YouTube channel 4 days ago. Really happy to see that. I mean, definitely happy to see this was, in my opinion, that interview is the start of a narrative change around Nike. Now, this narrative change will really last for the next several years. It's not like you change the narrative overnight, but it's just been so much negative publicity really for the last year that we kind of like reached peak negativity in regards to Nike. And I believe this interview kind of marks a turn for the sentiment in regards to Nike, right? Now, it was interesting. I also came across this video on Instagram, right? Talking about, and this is something I talked about in the past, about Under Armour and how great they were positioned. From insiders in the company, they're talking about like how many meetings they used to have on just worried about Under Armour back in the day. Nike did, right? Nike executives were so concerned about Under Armour back then, right? And it's just so funny to think like it was such a big concern back then. And like Under Armour is a stock that flirts with the gulag now, right? And it just goes to show you like decade after decade, these companies come in, they try to compete with Nike, right? It causes a scare. This decade is like the Ons and the Hokas and those sorts of brands that who knows? I don't even know if those will be relevant brands in a few years. I'm not joking. Like I don't know if anybody will be even wearing Hokas or Ons. And I know people right now are like, oh, I love my Hokas, I love my Ons. Okay, yeah, we'll see if you're still wearing that in a few years. Like it's just these brands come and go. They all come and go. Just like everybody was all hyped on Under Armour a decade ago, right? And now that stock flirts with the gulag, and people are like, Under Armour? I don't know where Under Armour. It's what happens, right? And Nike remains the giant. They remain the dominant player, decade after decade, generation after generation. And so I'm willing to bet on that brand. I can tell you that much. Next one I bought here today is Honest Company, HNST, $6 I paid for these shares, about $1,500 move there. In regards to Honest, this one's another one that's set up to potentially skyrocket after earnings if they come in, beat their numbers again, and have a great guidance and have a great conference call. Like that stock will be flying. Next thing you know, it'll be $7, $8 again. Now, I spoke about Honest's earnings in this video here. I not only spoke about Honest, I talked about my Palantir projections, my Tesla projections, all those sorts of stocks. I spoke about in this video right here. The thumbnail says, warning, there's a massive explosion incoming. The stock market is about to, okay? So if you want to watch that one, definitely check that one out. Now, last subject I want to speak about here today is the game changes for you every time you 2x, right? And if you 2x your money 7 times in your lifetime, it can completely change the game. It can take you from a situation where you have very little money to becoming a millionaire or multimillionaire. just with 2Xs in your lifetime. And I can tell you that's not a lot. Not a lot at all. I believe I have 6 or 7 stocks in the public account right now that I have more than 2X my money on. And that portfolio is not even that old. I started that portfolio in 2018 roughly? We're in 2025. It hasn't even been around that long. And those are just positions I'm sitting on, never mind all the positions I took huge profits on over the years. That would easily be a double up now, right? So to make a 2X on your money as an individual stock picker who's doing this on a high level over your lifetime, as easy peasy lemon squeezy. I can tell you that much. Easy peasy lemon squeezy. So check this out. You start with $10,000, you get a 2X, you're up to $20,000. You get a 2X, you're up to $40,000. Up to 2X, you're up to $80,000, 2X, $160,000, $320,000, $640,000, 1.2. But here's the fascinating thing. There's 2 fascinating things about this. One is you're going to consistently be depositing into your portfolios over the years, right? So the amounts are going to get much, much bigger because of all the deposits you're going to do over 10, 20, 30, 40 years, right? But the other fascinating thing is, once again, 7 2Xs in your lifetime is not hard. If you're a good individual stock picker and you've done all the trainings that I take you through and whatnot, man, and so if you're at a much lower number today, so let's say you're somewhere between this, and it feels like, man, I don't know if I could ever get to millionaire level or multimillionaire level. I can tell you, you can get there in a lot shorter time than you might think. But you got to be patient. You got to not screw up in terms of, getting caught into a bunch of call options, put options, and getting impatient with stocks and trying to short-term trade and all those things that can kind of distract you. Stay focused on making your weekly deposits in your portfolios, making sure you're buying companies that you're going to be proud that you own 3 years out, 5 years out, 7 years out from now, building a great overall portfolio, GVD, growth, value, dividends, right? And then just scale. But be careful of trying to take the shortcuts. That's the biggest thing I'll say. Be careful of trying to take those shortcuts. Those are just distractions that will pull you over to the side. Don't do the shortcut things. Play the long game, folks. Know what you're doing. No income statements, no balance sheets, no cash flows. Know how to value a growth stock. Know how to value dividend stocks. Make sure you're getting great deals on stocks. Use great softwares like 1000X to help you understand if you're getting a great deal on a stock, if you're getting ripped off, all that good stuff, folks, okay? Appreciate y'all joining me as always. Thanks so much for being here. If you're looking to access all my course curriculums, access my private Discord chat, exclusive weekly videos from me, see the stocks I'm buying and selling, my $3 million plus Fidelity. If you're looking to join the 6 and 7 figure club, all that stuff, pin comment down there, click on that, fill out a form. We'll see if we can get you access to my private stock group, maybe some point this week, maybe. We'll see, or in the next few weeks. Alrighty, guys, much love, drama in the market, take advantage, and have a great day.